What about if there's someone has a business open already for a little over a year,
Mhm.
and all they didn't pay the tax, they all messy, and they never talked to an accountant, got all this information. What are the pros and cons when you don't do your taxes?
Well, there are lots of cons, right? When you don't do your taxes most of the time, there isn't going to be any pros of you not doing that, right? So it's important for you to be up to date with your filings and with paying all the necessary taxes. There are penalties that the IRS and the state authorities will charge you for not doing it, and it's one of those things that are never going to go away, right? So you have some people that just think, oh, like I'm just going to ignore it, because that's something that bothers me, that I don't even want to deal with it, and then hopefully it's gonna go away one day.
Might be a
It's
lack
not.
of information too.
It
You
could be
know,
as well. It could be as well. There are some people that haven't had the proper advices, and they just simply don't know, right? So the first thing that I would recommend is first have a sit down with a CPA or with an accountant to go over your history, right? So there are things that can be done where you can pull a transcript with the IRS to find out what your history is, right? So pretty much the IRS knows most of the time when you have income that's reported to you, right? So if you worked for somebody or if you have clients that are paying you, right, and that gets reported to the IRS is waiting for you to file a tax return that's going to show that amount that already got reported to the IRS. So if somebody reports to the IRS that they paid you, and then you don't report to the IRS that you had that income, there is that mismatch. So that's going to be there outstanding on your record. The IRS is going to keep waiting for you to reconcile everything and report that income. Okay, trust me, it's not going to go away. So it's important for you to first, if your situation out is a little bit messy, or if you don't know what your situation is like, there are things that can be done to find out exactly where your situation is today. So that's the first step, is find out the history, what needs to be done, right? You can always file back returns as far back as you want to make sure that you're up to date so that you can sleep at night and, put your head on the pillow knowing that you don't owe the IRS, that you're not going to go to jail for not filing your taxes or not paying your taxes, right? We live in a society where it's the responsibility of the citizen, of the person that's living in the country, to pay the taxes that are required, right? So each person must pay their own taxes, and not just the taxes per se, but there are certain reporting requirements that you must do. Even if there isn't any taxes due, you must report, right? So each person's paying their own share so that we can have the nice roads, we can have the public school system, we can have, the things that we have here in this beautiful country here in the U.S. specifically. So it's your responsibility to be up to date with your taxes. First step would be to find out what needs to be done, going backwards, and then on the annual basis there, at least, for you to be up to date with everything that needs to be done.
If you been having an audition,
Audited, yep.
if you audited, what are the consequences? Let's say you've been running your business for 3-4 years and you never file taxes, or you might have a better question.
Inside your question, like, can IRS have access to your bank account? So if you're not reporting what you're making, can they have access and see how much money was
the
being
consequences
deposited?
of it.
Yep. And then if you get audited, how does it work?
Yeah. So normally the IRS is not going to have that information automatically from your bank accounts, right? Unless you're being audited or investigated. I'm not going to say that that's 100% of the time. So it could be that the bank that you're in could report something to the IRS, which could lead to an investigation or to an audit. So that's also possible as well. Or there could be a tip from somebody. It could be your competitor on the road that knows for a fact that you're not filing your taxes. They could contact the IRS and let them know. And then the IRS would reach out to you saying, hey, I see here that you're not filing your tax returns. Let's take a look closely, right? So what happens in an audit is that it's the taxpayer's responsibility to prove everything, right? So you're pretty much guilty until proven innocent, right? So if the IRS sees that you deposited $100,000 in your bank account and you're saying that that's not income, or you didn't report that, you have to prove that you don't have to report the $100,000 of income, right? Yeah, not all money receipts equals income, right? So you can have a gift that somebody gives you. You can have inheritance, right? That's not going to be taxable to the taxpayer. It could be a loan that you got from somebody, right, that you have to pay back. So that money going into your bank account doesn't necessarily mean that you have to pay the taxes. But it's the burden of proof to the taxpayer to prove to the IRS, hey, this money that got deposited there is not income. So you have to prove. You got to show loan documents. You got to show inheritance documents, you know? So, and same thing with the expenses, right? So when you're audited, the IRS is going to want to make sure that everything that you claim, whether income or expenses, are in fact tax deductible or taxable income, right? So it's your responsibility to prove to the IRS. It's not their responsibility to prove to you that they aren't deductible. They're automatically going to assume that it's not deductible. So you have to go and prove, okay, so this lunch that I have with my vendor or with my client, okay, I went to a restaurant to pay there $50, and I ran it through the business account, okay, and I deducted that on my taxes as a business deduction. The IRS is going to want to know, hey, was that a business meeting? Can you show proof of that business meeting? Can you show what were the topics that were discussed? Who were you with? So then it's up to you to keep a log of these expenses so that if you're ever audited, you can prove. And that's for every business deduction. Okay. Now, do you need to keep track or record of all of those business deductions? Essentially, yes. The IRS could question you on all deductions. If you can't prove, they won't take it. But the IRS is also reasonable. So there are going to be some things there. For example, if you work in a barbershop, right, and if you own a salon, if you're using the company's credit card to buy some supplies, right, so you're buying shaving cream, right, and if you go to your vendor and if you purchase 100 bottles of shaving cream, you don't necessarily, just because by having that receipt that you purchase, or if it's on your bank statement showing that you purchased from this vendor, which is a vendor that only sells shaving creams, then you can prove, hey, I use my company card to pay this vendor. All they do is sell products. So yeah, so the IRS will know and count that as a business deduction. Now, if you're using your company card, let's say, to go to Walmart, right, you could be buying some supplies at Walmart, correct? Or you can buy cleaning supplies there. You can buy, there are lots of things that you can buy at a place like Walmart. But you can also buy a new TV for your home, right? Or you can buy other personal stuff. So if you're just using your company credit card and to buy at Walmart, you got to have some sort of other backup just in case you're audited to say, hey, I went to Walmart, I spent $1,500, but it wasn't to buy a TV for my home. It was to buy supplies, I bought water, I bought, paper towels for my salon or whatever, So in those situations, it's even more important for you to keep good records.
Question: They can confiscate stuff in your salon or barbershop or put a lien hold in your house because the if you got audited and if you're not correct with everything you do. I heard once someone that I know works in construction. Mm-hmm. He told me he never paid his taxes. I think after like 10 years, never paid his tax, never filed a tax return. He got audited over $1 million, and also they confiscated his house. I don't know if it's called confiscated, but they put a lien. Mm-hmm. That can happen?
Yeah, that can certainly happen. So you have to pay your taxes, right? So when you don't do that, the IRS has the power to put the lien on your assets. Right, so those assets could be your bank account. Those assets could be your home, your car, right? So I've had clients that were in that situation where they owed a lot of money to the IRS, and the IRS assigns an agent, so that's going to be responsible for your case. They're going to be calling you. They're going to be very aggressive too. So they're in that position to get all the assets that you have, find out everything about you.
And can cost you a lot of money with lawyers too, right?
Oh, of course. Yeah, if you're going to be going backwards to take care of a situation, and you are going to need help, right, most of the time. So whether it's hiring a tax attorney or a CPA to go back and argue in front of the IRS for you, that's going to cost you money backwards, So aside from all the taxes that you have to pay, you are going to need help to take care of this problem. It's not, like I said, it's not going to go away. And it can certainly get to a point where all of your assets get, liens on them, and the IRS can actually force you to sell some of these assets to pay your tax bill, So that for sure happens. I see it a lot. So yeah,
because you
tax.
didn't do it right, and then it becomes ugly, right? Situation.
Yeah, and aside from you having to pay the tax that's due, you also have to pay penalties and interest that gets added. So I've seen cases where the person owes $60,000 in taxes, but they owe $80,000 of penalties and interest and everything else. You know, so that keeps getting added. So the longer that it takes for you to take care of that situation, the more you're gonna have to pay in the long run, and it could be more than the actual tax.